Hello everybody. Firstly, I'd just like to welcome you to this webinar. We'll be talking about the European Central Bank Policy Meeting to be held on September the 12th. More importantly for you, we'll talk about the potential trading opportunities that will come about. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now let's talk about market opportunities. If you don't know what they are, allow me to explain. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis, and includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. So here's an example of a market opportunity. You can see some fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests that the euro would decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. For example, the part on the EU and its disagreement with the Italian government over its budget, which has put pressure on the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the right-hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's had you decided to trade on this market opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further along. At these points you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these types of profits at the support levels in green. If the price is going against you, then you can potentially have a loss of this amount at these resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. So what's the role of this ECB? The European Central Bank is a central bank for the Eurozone, and it sets and implements monetary policy for the Euro area. The main objective of the ECB is to maintain price stability within the Eurozone. Like many of the major central banks, it aims to keep inflation at 2%. Mario Draghi is the president of the European Central Bank, but the council consists of 6 members of the executive board and the governors of the national central banks of the 19 euro area countries. Draghi will be succeeded by the current managing director of the International Monetary Fund, Christine Lagarde, in November. Monetary policy is the strategy used by a nation's central bank on the amount of money in circulation in the economy and what that money is worth. If an economy is growing too quickly and inflation is high, the central bank might try to slow down the economy by raising interest rates. Generally speaking, the rule is usually when a central bank decides to increase interest rates, it's likely that the value of the currency will increase. However, it's more complicated than that, since market expectations are as great a factor as the bank decision itself. For example, if traders expect that the ECB will increase interest rates by a percentage point, it's likely that the value of the euro will grow before the announcement. However, if the ECB announces an interest rate increase of only half a percentage point, the value of the euro might drop sharply, at least for a short period after the announcement. Speculation and expectations have a powerful effect upon the markets. You can see on the chart before you how deposit rates have varied over the past decade until reaching the record lows of below 0% we have today. The current deposit rate is minus 0.40. Until recently, interest rates were only one of the tools of monetary policy used by the ECB to encourage an expansionary or restrictive economic plan. The historic lows that you can see on the table were designed to encourage the sluggish EU economies since the financial crisis. And although the economic situation in the Eurozone has improved from that time, growth remains weak. As you can see, Eurozone GDP is currently only 0.2%. The inflation rate is 1.1%. This is worryingly low and well below the ECB target of 2% and is an important factor when the ECB decides the interest rate. The unemployment rate has been falling gradually and is now at 7.5%. The previous ECB monetary policy meeting was held on July the 25th and, as expected, the ECB again held its record low deposit rate at minus 0.4%. Following the decision, ECB President Draghi stated that a new phase of expansionary monetary policy would be necessary to push inflation towards its target and to stimulate growth. The minutes from the meeting show that ECB policymakers felt that a combination of rate cuts, asset purchases, changes in the guidance on interest rates, and support for banks through partial relief from the ECB's negative interest rate were necessary, although there were differing opinions on what would be most effective. On the day of the decision, the euro-dollar fell by 0.17%, as the potential for interest rate cuts was considered by investors. What might have prevented the euro from falling more sharply was that the ECB were considering multiple means of stimulating growth in the eurozone, and that interest rate cuts was only one measure under consideration. Earlier in the month, bank officials had stated that changes in monetary policy may be necessary. In any case, the ECB MPC meeting is actually a very good example of how deeply events can affect currencies, and why traders see an ECB monetary policy meeting as a good opportunity. ECB policymakers are concerned about the trade war and sluggish growth in the Eurozone economy. The political crisis in Italy has also put the euro under pressure. We can see this on the graph, that the euro-dollar is experiencing a longer-term downtrend, which began around March last year. Poor economic data and the knock-on impact from Brexit have added to the pressure on the euro. Last week, the euro fell against the US dollar to its lowest rate since May 2017. The prospect of lower interest rates doesn't suggest that the euro will turn around and push higher anytime soon. Of course, the euro is only part of the story, and the dollar has been strong. However, the dollar index has also traded lower in the above period, but as you can see, there is no sign of that on this table, which underlines euro weakness. So what's expected this month? The ECB meeting is one of the most highly anticipated for many months. Most investors expect that monetary policy measures will be announced. What is less clear is whether this would include a cut in interest rates. However, most analysts believe that there will be a rate cut this month, while Bloomberg states that there is a 100% probability of a deposit rate cut. But some economists believe that further rate cuts upon existing negative interest rates does not inspire confidence and may signal panic, trigger a further fall in the euro, and not provide much economic stimulus. Investors are uncertain whether the ECB will announce a small 0.10% interest rate cut or potentially announce a higher 0.20 interest rate cut. A sharper cut may, of course, cause a drop in the euro-dollar. It's still possible that a package of measures might be decided upon instead of a rate cut, and this may provide some support to the euro. However, the main issue isn't so much interest rate levels, it's the poorly performing Eurozone economy and unresolved issues such as the trade conflict with the US, which could send the Eurozone into recession. That is the main issue. Of course, we at Fortrade will be following any developments that affect the markets very closely, so please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Until next time, goodbye, and please join us again at Fortrade soon.